Hi, my name is Joe. I am a long-term ICT student, from way before the beginning of the mentorship. I have often felt overwhelmed by the amount of time that is needed to do an effective top-down analysis, especially while keeping an eye on different asset classes or indices for SMT and inter-market analysis purposes, and all this while trying to make money. Since he has introduced it, I have fallen in love with Michael's silver bullet framework, as it reduces the time spent in front of the chart and the number of trades per day. In order to make my life as easy as possible and reduce the amount of time I spend on the charts, I have coded an indicator that brings a mountain of information gathered from higher time frame throughout the three indices, right there for you on the lower time frame of your choice. I have also expanded the idea of intermarket analysis and created a few concepts of my own, in an effort to highlight only the best setups. I find this indicator incredibly helpful on a daily basis, both while live trading and during the evening review, as the most salient informations are there, without the need to faff around. I strongly believe that anyone will be stunned by the effectiveness and the time-saving capabilities of this method, although the results will be enhanced by a solid top-down analysis and, of course, by keeping track of the news calendar. For disclaimer's sake, there are no buy or sell signals here. Although the signal will jump literally off the chart once you find your way through this indicator, and the many examples that I will bring on a daily basis. This is not a one-off selling pitch, but rather an introduction to a lifelong series of very short examples on how to capitalize using this New York session and silver bullet indicator. Due to the amount of information that this indicator processes, I have broken this video in several chapters, mirroring the options and customization in TradingView. As a general note and house rule, I am going to refer for brevity to US 500, US 100 and US 30 as S&P, NASDAQ and Dow Jones. Chapter 1. New Week and New Day Opening Gaps. As exposed in the last few months by Michael, New Week opening gaps and New Day opening gaps are of paramount importance in navigating the weekly range, both on higher time frame and in lower time frame. Here is an example of US 30, 5-minute chart, spanning for 17 days in August 2023 where the New Week opening gaps are highlighted by the indicator. It is very refreshing to see how many times these levels are respected and how they can be used as landmarks. In the following example for the weekly range of US 500, we can see how the high and low of the week overlap very closely to previous New Week's opening gaps. Chapter 1.1. Monday's Time and Price. In order to have a clear view of the weekly range and to have landmarks in higher time frame price delivery, we can plot each Monday opening time, using a dashed vertical line. We can then plot the Monday opening price to highlight possible Judas swings and premium versus discount in price delivery. I have decided to plot only the Monday opening price of the last week in order to keep the chart as clean as possible. We can access previous week's Monday opening price using the TradingView replay feature. Here is the previous example on US 500 with the Monday opening price on. Now it is easier to see the Monday consolidation to Tuesday high of the week at premium above the Monday opening price, and subsequent decline, while the New Week opening gaps act as support and resistance. Chapter 1.2. New Week opening gap and look back. Due to TradingView's limitations in the amount of candles displayed on chart, when observing a 1-minute chart, we can only display the current week New Week opening gap. When observing a 2-minute chart, we can display 2 New Week opening gaps and so on. As Michael has taught us, the previous 60 days worth of New Week opening gaps are influential in price delivery. In order to keep track of the old New Week opening gaps, we can toggle between the different lower time frames, up to 15 minutes chart, where all the relevant New Week opening gaps are displayed. In this way no manual intervention is needed, but in my view this is not a very effective way. It is advisable instead to manually copy all the New Week opening gaps from the 15-minute chart, where only the right amount of active New Week opening gaps are automatically displayed. Having a rectangle template for the New Week opening gap will aid the process. I would suggest to keep all the New Week opening gaps in a separate object folder, In this way you will have all the new week opening gap at your disposal on any time frame. It might be a bit fiddly the first time, but then, each week, we just need to add the new week opening gap and remove the oldest. As a result, we have a list of very powerful support and resistance arrays. In order to make this process easier, we can activate the look back function to display the 20 days, 40 days, and 60 days look back periods. Here is an example on 1 hour chart, where the new week opening gaps are not plotted. Chapter 1.3. New day opening gap. With this next feature we can plot the new day opening gap. The indicator only plots 5 new day opening gaps at the time, because, as described by Michael, they expire after this period. Here is an example of the new day opening gap being used multiple times in a consolidation day. As a recap, an example of the first chapter and the information and prices arrays shown so far, we can look at US 100 for Monday the 14th of August. Price stall in the new week opening gap. Then run to the previous Friday new day opening gap. Price then return to discount, piercing the Monday opening price. It then reaccumulate on the new week opening gap for a low resistance liquidity run into the intraday high. Chapter 2. Previous day's high and low. Institutional liquidity resides mostly at, or near, any previous day high and low that has not been traded to. We can plot those levels on 1 to 5 minutes chart, automatically. If we trade to this level before 8 AM, the indicator will consider them as taken and not plot them, as the aim here is to aid trading the New York session. Once again, due to the limitation of TradingView, if no previous day high or previous day low are displayed on 1 minute chart, we can switch to 2, 3, or 5 minutes chart to access many more previous day highs and lows and display them. As an example of the importance of previous day's highs and lows, on the 10th of August we see US 100 sweeping both sides of the market, grabbing the previous day liquidity, a clear draw on price. Chapter 3. Intraday SMT. For each index, the indicator keeps track of the highest and lowest price intraday. It then compares those values with each new candle's high and low to detect intraday SMT. The SMT can be displayed in 3 ways. As background color, as a text on the top right corner of the screen, or as a small arrow plotted at the bottom and top of the screen. Note how the bullish intraday SMT nails the low of the day, while the bearish intraday SMT keeps being broken as this index posts higher highs and another one does not. Chapter 7.5, Previous Day SMT. Chapter 4. Previous Day SMT. If one average trades higher than the previous day while another one is reluctant to do so, we have a previous day SMT. The previous day SMT can be displayed as a background color, or text, or big arrow, in a similar fashion to the intraday SMT. Note how the previous day SMT on highs does not lend immediately to lower prices, while the previous day SMT on lows does. Chapter 5. Higher time frame backdrop. At the bottom of the chart, we can plot some higher time frame informations derived by ICT's core content. 1. Seasonality. The seasonality is like a loose roadmap. We look back at 15 years of price action and we extrapolate how price has been behaving on average. I feel I have condensed a lot of information here without being overwordy. 2. Non-farm payroll protocol. The indicator detects if this week is a non-farm payroll week and display a day-to-day reminder, as it is better not to trade from the Wednesday prior to the non-farm payroll news release. 3. Weekly profile. Here the indicator sets a reminder about the day-specific likelihood of price behavior. This includes the high and low of the week and the TGIF protocol. Chapter 6. Daily volume imbalances. During my extensive backtesting, I have come to realize that daily volume imbalances are of paramount importance when looking at price from an algorithmic point of view. My indicator can plot the daily volume imbalances right on the 1 minute chart without the need to go back and forward. Very convenient. Chapter 7. Daily fair value gaps. Similarly to what we saw on the last chapter, my indicator can plot the daily fair value gaps right on the 1-minute chart without the need to go back and forward. I consider this a supporting factor, rather than a core part of my analysis. But this is a personal opinion, and I do refer to this feature very often, for context.